the best of Money Matters. Market View on Money FM 89.3.
That's right, you're tuning in to Money FM 89.3. Time now for Market View with me, Chua Tian Tian, where we take you through how the Singapore stock market closed for the day, the biggest movers, sectors, and of course the companies to watch. But as always, a quick recap of some key movements. While Singapore shares fell today on the back of earnings from blue chips. So the Straits Times Index was down 0.81% at 4,223.85 points at 2:19 p.m. Singapore time, and that is with a value turnover of 1.29 billion Sing dollars seen in the broader market. Now let's take you through how the Singapore stock market ended the day. The STI ended in the red as well, down 0.43% at 4,239 points. Now in terms of value turnover, that's 2.03 billion Sing dollars. Gainers stroke losers 190 versus 344. Top 5 movers by value. Let's take you through them. We've got for you DBS, Semco Industries, UOB, Yangzijiang Shipbuilding, Sing Dollars, and SIA. And heavily traded securities included Genting Singapore, Hiap Sing Industries, and Rex International. Now, in terms of counters to watch, we have the Singapore Exchange. The bourse operator there announcing today that net profit for the second half ended June declined 2.6% to 308 million Sing dollars from some 316 million Sing dollars seen in the year prior. Now, elsewhere, from how Japanese stocks rallied on the back of U.S. trade deal hopes to how Intel CEO Tan Lip-Bu responded to U.S. President Donald Trump's call for his resignation. For the first time, we've got more international and corporate headlines in focus. And joining me on the line on a Friday is Benjamin Goh, Head of Research and Investor Education at SIAS. Ben, welcome back.
Hey, Tian Tian, how's it going?
Good, but let's start with the Singapore stock market as usual. Not so good there, ending the red. In fact, shares of some STI constituents and semiconductor firms fell today on the impact of earnings as well as U.S. imposed tariffs kicking in. So how would you read into the movements? Any surprises when it comes down to the biggest movers?
Well, certainly there were quite a few hit and misses for companies announcing the earnings in this season. If you're talking about the three banks, DBS, cum dividend is up 2%. Correspondingly, OCBC ex-dividend is down 1.7%. Fairly large numbers, but nothing to worry about because, the price goes up or goes down whether you include the dividend or not. If you look at UOB, it's down 0.31%. Not that large, but largely reflective of the, lukewarm sentiment heading into the National Day weekend. Surprisingly, agricultural sector was doing well today, or did well today. Wilmar, Olam, and Golden Agri all advanced between 0.3 to 2%. Nothing significant happened in terms of news flow, so probably because the counters advanced because of our technical trading signals. But broadly speaking, the STI trading action was surprisingly very interesting, very similar compared to U.S. markets last night. Insofar that sell-downs earlier in the session were mitigated by investors buying the dip. So it could be there's a bunch of people out there who are just waiting for prices to move into the Great Singapore Sale territory before entering the waters.
Okay, and Ben, zooming in on some of the counters to watch. Very quickly, we've got the Singapore Exchange on the back of its earnings. In fact, net profit for second half ended June declined 2.6% on the year to 308 million Sing dollars. How would you read into the latest numbers?
So no question about it. Very good full year results. Net revenue up 11.7%. The SGX Group was showing strength in virtually all its products. So including fixed income, currencies, commodities, cash equities, as well as equity derivatives. So coming back to second half specifically, revenue was up about 4%, but profit down 2.6%. The company has already guided that its total expenses are comparable to previous years, and it also affirmed that expenses are on track to increase by low single digits between 4 to 6% as per their previous guidance. So no surprises there. So it looks like the weaker second half performance could be because of the market uncertainty unleashed by Trump's U.S. Trade policies. dampening trading sentiment globally, not just in Singapore, but also could be a timing issue with higher expenses being recorded in the second half compared to the first half. I think coming back to the issue of expenses, I don't think that's going to be a problem for SGX because, typically they've been quite judicious in how they manage expenses. And I think that SGX has got the right operating model, products as well as people. So I don't think there'll be any kind of execution risk. I think the main risk factor for SGX is, of course, the macro environment, which is, totally out of their control.
Okay, and let's stay with SGX, Ben, because SGX's head of global sales and origination, Paul DeWin, said more than 30 companies are currently in the SGX's IPO pipeline, and DeWin disclosed the number at the group's financial results briefing in response to a question from Thilan Wickramasinghe from Maybank Securities, who asked for further insights into the IPO timeline, the types of companies involved, sector representation, and expected timelines. I think DeWin addressed that somewhat in his response. So what do you make of his answers? Brighter days ahead for SGX, perhaps?
Not so much. I think it's not going to be all sunshine and rainbows. Yeah. I think both the quantity, so 30 is a nice number, but also the value of the IPOs are important. You think about it, right? Having one Tesla or one NVIDIA listed SGX will be much better than dozens of small and big-cap companies. But I think we also need to be circumspect because, to put things in perspective, right, as I alluded to just now, the IPO pipeline is not the only or main business driver for SGX. Yes, you need to have a pipeline of IPOs to kind of build the ecosystem, build products around, but SGX is also a very important trading venue for its own derivative products. So again, taking the example of NVIDIA or Tesla, you cannot trade NVIDIA or Tesla shares on SGX, but you can actually trade NVIDIA and Tesla derivative contracts on SGX, and this, specifically the daily leverage certificates. So very, very helpful for investors who want to hedge or, short sell their U.S. positions, but within Asian time zones. And if you think about it, investors both domestically as well as overseas investors which are trading on SGX, they're becoming savvy over time. So they don't necessarily restrict themselves to investing in Singapore listed companies. What they want is more of a comprehensive trading venue where they can trade, frankly speaking, follow the sun model. That means you can trade anywhere in all overseas markets through one trading venue, and SGX is working towards that. So I think this is very important to remember that. So IPOs are one thing, but SGX is more than just IPOs.
Okay, and very quickly, maybe a 30-second question, because I do want to move on with what's going on in other parts of the world. Today, we are seeing some significant movements relating to Semco Industries on the back of a 1% decline in earnings. I believe shares were down as much as 12%. Any thoughts on the movements today?
I don't think the numbers are that bad, because if you look at the company recorded a $95 million FX loss compared to a $46 million FX gain in the same period last year. And of course, the sale of Sembawang Corp Environment also meant that the earnings from that subsidiary was excluded. So it's not really an apple-to-apple comparison. I think a little bit more concerning for me would be the narrowing energy generation spread. But I think that should be mitigated in the long term by the company's investments in renewables as well as Singapore's escalating energy needs. So if the company continues to execute well, it's still going to be a very key player in Singapore's energy build-out.
Okay, and across the region, Ben, let's talk about Japanese stocks. They rallied today on a mixed day for Asian markets, and that is after Japan's tariffs envoy told reporters that Washington is expected to revise an executive order that stacked tariffs on top of each other. It also lowered tariffs on vehicles. So what's your take on the movements today, and also adding to that optimism, the earnings out of SoftBank and also Sony?
Well, I think it's good news, but not great news. So obviously any kind of revision to the tariffs on automobiles is great. But from a product perspective, operating model perspective, the legacy automobile manufacturers from Europe, from Japan as well, basically they are being eaten alive by BYD and other Chinese automakers. Yeah. So, Toyota specifically does not actually have a good answer to the EVs produced by BYD or Tesla. And if, there are lots of BYD cars in Singapore nowadays, and, recently I took one for a Grab ride, and really it's fantastic. It's got a sunroof, it's got a spacious interior, it's sexy. And you think about it, when was the last time you thought of Tesla, or rather thought of Toyota as sexy? So, yeah, tariffs is one thing, but the product itself is a different thing, right? A different set of problems. Mm-hmm. So I think that doesn't bode well for the long-term momentum of the Japanese market. So currently, as you can see, the Nikkei is up, so on and so forth. More or less, I think it's a knee-jerk reaction in the short run. Japan itself has got other structural issues, things like the rapidly aging population, basically means rapidly shrinking consumer market. It's got its revolving door of prime ministers and government policies. It's got its hyperinflation problem. Okay. So on balance, I think the macro environment for Japan is quite worrying, so we need to see bolder reforms going forward.
Okay, I've got about 1.5 minutes to go, Ben, but I really want to talk about this, so I'll keep my question short. What is going on between Intel CEO Tan Lip-Bu and also U.S. President Donald Trump's call for him to resign? I believe, Tan has spoken up. He said he will provide more information, is working with the administration. How seriously are investors taking in the news given the structural problems at Intel?
Well, definitely a big negative for investors. The stock price dived 3.1% last night. Doesn't look that good in the after trading market session. The pre-trading session also not good. So definitely a big negative if Tan is forced to relinquish his position in the middle of Intel's restructuring efforts. And again, as you alluded to, Intel has got multiple challenges. Its consumer-grade CPUs not selling as well vis-a-vis AMD. Is consumer-grade GPU products, again, they kind of occupy the mid to the lower tier segment of the market. Can't really compete with NVIDIA and AMD. Companies' credit rating was actually downgraded recently to BBB. So any change in the top dog is definitely not going to be seen or received well by the market, at least in the short run. So that's probably going to be a very important risk factor for Intel.
I see. Thanks so much for the insights today, Ben. That was Benjamin Goh, Head of Research and Investor Education at SIAS. Thank you so much for joining us on Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance.